Enenche, and the rest of you. And I believe this is your real name. So since we have these names, I don't think there is need for us to still go on with the introduction, judging from the time or the time limits. I only introduce myself. Then you can do yours. If you have another name here that using it as your username that is not your real name, you can help us to change it to your real name. That will help us to identify ourselves. So please do that so as to not waste more time. So my name is Dr. Mrs. Okoye Amara. And as I've just said before, that I'm now your facilitator, course facilitator on ACC 824, which is Advanced Accounting Theory and Corporate Financial Reporting. Then looking at the course, looking at the title of the course, you see that we have two major concepts, which include accounting theory and corporate financial reporting. That is to say that the first concept in that the title of the course is accounting theory, whereas the second one is corporate financial reporting. Then what is this accounting theory? What do we mean by accounting theory? And now what is financial reporting? We take it one after the other, or we take them one after the other. When you talk about accounting theory, you can say that accounting theory is the logical reasoning in the form of a set of broad principles that form the general structural framework for the evaluation and development of sound accounting practices. What are we saying? You're talking of set of systematic principles, and these principles now form the general framework which we can now use for evaluating and developing sound accounting practices. In other words, it can be seen as the fundamental ideas, policies, assumptions, and bases that regulate and direct the practice of financial accounting. That one is for accounting theory. You're talking of the principles that can help you to develop sound accounting practices. Then what of financial reporting? Financial reporting, on the other hand, is the process of compiling and organizing financial information into meaningful reports to appropriate decision makers. And a fair understanding of accounting theory lifts the subject from a mere treatment of how to the why of financial accounting. What do we mean by this statement? When you say that a fair understanding of accounting theory lifts the subject from a mere treatment of how to the why of financial accounting. That is to say that accounting theory will help you to know why we are doing, or why we are doing what we are doing in financial accounting. For example, now when you want to prepare your final accounts, taking it as an example, we know the formats for preparing the final accounts, where you have the statement of profit or loss and other financial and other comprehensive income, sorry. Then you have a statement of a financial position, cash flow statement. We'll still come to that. Those financial final accounts or financial statements that you prepare, we know the formats for preparing them, or we have the formats for preparing them, and we know how we are preparing them. But the accounting theory is what will now tell you the principles or the rules that will guide you on how you are now preparing those final accounts. That is why we now say that a fair understanding of accounting theory lifts the subject from a mere treatment of how to the why of financial accounting. Then this one serves as introductory part of this course. However, the course Advanced Accounting Theory and Corporate Financial Reporting will expose you to the knowledge of historical foundation and development of accounting theory. Where after studying this course, you now know how accounting theory is being how is being evolved, and now the practice itself of accounting itself. Then what we have to do now is to move into the evolution of accounting theory and corporate financial reporting. Or one can say that we can also term it the origin of accounting theory and corporate financial reporting. What is accounting? We cannot be talking of evolution of accounting theory or evolution of accounting and corporate financial reporting without knowing what accounting is all about. What is then accounting? Accounting is often defined as the language of business. Accounting is often defined as the language of business. And mind you that a language is a medium of communication. When you talk of language, you're talking of a medium of communication. Whereas this communication involves the identification, processing, and transmitting, then receiving information. I'll repeat. I said that accounting is often defined as a language of business, and language is a medium of communication. Then what is this communication? Communication involves the identification, processing, transmitting, and receiving information. However, we can say that accounting is the mode in which business information is identified, processed, transmitted, and received by the relevant parties in business. What I'm saying in essence is that when you define accounting as language of the business, we are seeing accounting as the mode in which business information is identified, processed, transmitted, and received by the relevant parties in business. Note that every language has a history which traces its stages of development and growth. So is accounting. So accounting also has its own history, and that is what we're discussing today. Accounting in the form it is known today did not just appear suddenly. Its evolution followed a process at the early stages, unconscious, but later very carefully guided. That accounting, the way we are seeing accounting today, it does not just emerge like that. It follows stages by stages. It was previously, or at the early time, we were just doing it unconsciously, but later it now followed very carefully way, or we can say that it was later very carefully guided. Accounting as a language of the business implies that accounting is as old as the business exchange. We're talking of accounting as a language. I believe and I hope that you still remember what business is. So when you're now talking of accounting as the language of the business, what it means is that it implies that accounting is as old as the business exchange. So even before writing was invented, there must have been in the days of trade by barter a method of determining that the items to be exchanged were of comparative value. What I'm saying is that at those early stage or at those early time of trade by barter, then writing was not invented then. So since accounting is the language of the business, what it means is that there must be at in those days way of determining that the items that the parties were to exchange were of comparative value. And the notion of fairness and comparability involves accounting. If you can remember, we'll still go into it when we talk of the principles and concepts of accounting. So when you're now talking of fairness and comparability, it also involves accounting. So for those people that, for those men then that were trying to exchange items during the trade by barter, and then writing was not invented then, there must have been a way that they will determine that the item that you want to exchange for the other item is of comparative value, and that involves accounting. Here, subjective accounting was in place. Subjective accounting subjective accounting was in place during this time. And what are we, when we are talking of subjective accounting, then we are now talking of determination of values. Then when commerce advanced beyond the level of trade by barter, subjective accounting became inadequate for its use. Just mere determination of value now became inadequate for its use. There was need to have more objective method of determining past values for comparison purpose. And as a result of that, money was invented to serve an accounting purpose as a medium of value and medium of exchange. This process have a mark in the definition of accounting only in monetary terms. If you can remember your definition of accounting, every accounting information or everything about accounting must be measured in monetary terms. That is why we now say this particular period invented, that it has a mark in the definition of accounting only in what? Monetary terms. Note, at those early stages, before writing was invented, mental records sufficiently serve the purpose of accounting. Mental records, that is, during then, where before writing was invented, we practice what we called mental recording. Then after the invention of writing, written records became necessary. After the invention of writing, written records now became necessary. Then let's talk about the early accounting records. Some of the earliest records are accounting records, and they are of the ancient Middle Eastern civilization of Egypt, Mesopotamians, and Crete. There were many records of physical quantities of goods, suggesting that accounting predates monetary economy. Yes, we've said it before that accounting predates the invention of money. Then when money was invented, the system accommodated money measurements. The earliest form of money was not coinage and paper, as we all know. It wasn't coinage and paper that we are using now. Therefore, some difficulties were experienced in maintaining records. Coinage was invented probably in Lydia at about 700 BC. Please, you have to pay attention because of the name associated with this evolution. What you just have to know is that before the invention of writing and also invention of money, there exists accounting. And the existence of accounting that we're talking about, since accounting is seen as the language of the business, it means that accounting must have been in place so far as business has been in place. And during the trade by barter, that's what there must have been a way that the parties involved will do what? Compare that the item you want to give to me, what this particular item that I want to give to you. And that is comparability, and that involves accounting. Then when writing was invented, we now make use of written records in accounting. Then what of money, emergency of money or invention of money? That now brings, due to the fact that there is need for a more measure of the items to be exchanged. We need a more sufficient measure that we can use to measure that this item is of comparative value to this. That now brings the emergency of money. That is to say, that is where money, invention of money now became necessary. And that's when money was invented. So we now say that the coinage was invented probably in Lydia at about 700 BC. With time, it spreads to other Mediterranean cultures, making it possible for accounting records to reflect money values. This is why some scholars maintain that accounting in a true sense has its origin in classical Greece. I'll repeat, I say this is why some scholars maintain that accounting in a true sense has its origin in classical Greece. The reasoning arose because of the modern definition of accounting in terms of money measurements. But this can be seen not to be true, since accounting predates money. In those early days, records, including accounting records, were inscribed on stones and marbles. The records in those early days, records, including accounting records, were inscribed on stones and marbles. Then the early Greek and Roman accounts were kept on the charge and discharge principles, comparable to modern day receipts and payment accounts. That the early Greek and the Roman accounts were kept on charge and discharge principles that is comparable to modern receipts and payment accounts. Then what is this charge and discharge principles? What do we mean by charge and discharge principles? The charge and discharge principles, this is a very important aspect of this evolution. If you've seen the exam question of the last time, I think this particular charge and discharge principle was part of their exam question. So please, let's just listen attentively. I said, what is this charge and discharge principles? This principle is of the view that a steward responsible for some trusts tendered periodic accounts by producing two lists. The first list is the charge list, and the second list is the discharge list. I'll repeat. This principle is of the view that a steward responsible for some trusts tendered periodic accounts by producing two lists, which include the charge list and also the discharge list. Out. What is this charge list? The charge list contained any real money due to the principal at the beginning of the period, plus any receipts from him or his behalf during the period. When you're talking of a steward, when you're talking of stewardship in accounting, I want to bring it home now. If you're talking of stewardship in accounting, for example, now you like if you now maybe you owe an establishment, then in that your establishment you employ somebody to help to manage the establishment or manage the affairs of your business. Then you have to trust that person your resources, probably in form of cash, capital, or the any form of resources that you must have entrusted to that person. Maybe you start up with you have goods, and also you also entrusted that person with funds too. So that person that you must have entrusted those resources of yours to manage that your business supposed to be accountable to you as regards to how he or she manage the business. That is to say, the sources of her fund, the one that you've given to her, the income that is coming into the business, and now how she now spends those resources that you have entrusted to her. So those resources that she must have spent, she has to account for all the income and also the expenses, then the balance too. So that is when we are now talking of stewardship function in accounting. So this charge and discharge principle is just telling you that that person that is the iffy that you must have entrusted your property or your resources to must produce two lists so as to account for what you have entrusted to her. And these two lists that we're talking about is now the charge list and also the discharge list. Then this charge list contains any real money due to the principal at the beginning of the period, plus any receipt from him or on his behalf during the period. Any money that is coming into the to Ife now, and all the money that's coming to Ife, and also that of the receipt that will come and the money that is given at the beginning should contain at the in that of a charge list. Then what of this charge list? It consisted of the disbursement of goods or monies on behalf of the principal during the period, and the balance figure indicating the balance due to him. We're talking of this charge list, you're talking of that of the disbursement, that is the expenses, how she spended the money, or the expenses or the disbursement that she must have done as regards to the money or the goods, as the case may be. And now the balance. The balance, when you're talking of balance, we should know this is a matured program. You're talking of that of the one that comes in and the one that is being given out, then you now know the balance figure. So that is when we are talking of charge and discharge list. Mind you that the total of the list always agree. The total of the list always agree. That is to say that all the ones that is the money that is being entrusted to Ife, she has to account for it on the way she has spent those money. So the total of the list has to agree. They always agree. The intention of this system, which system are we talking about? Hello? Hello? I hope I'm communicating.
Yes, you are. You
I
are.
said,
Yeah, you are.
all right, thank you. Okay. I said that the intention of this system was not for the calculation of profits. It wasn't for the calculation of profits, but centered on the need to keep track of the assets and exercise control over those entrusted with property. That the intention of this system, which system are we talking about? We're talking of the system of that requires, or the system that involves this principle of what?
Charge and discharge
Hello,
list.
thank you. That system, the intention wasn't for the calculation of profits. No, that was not the intention. But the intention centered on the need to keep track of the assets and exercise control over those entrusted with property. In the current day terminology, the charge and discharge system of bookkeeping is known as single entry bookkeeping. I will repeat this, that in the current day terminology, that is presently as we are now, that this charge and discharge system of bookkeeping is known as single entry bookkeeping. Have we heard of single entry bookkeeping? We're supposed to have done it in our what degree, the first degree. Yes, that was year one work. Yes, year one work. When you treat a single entry bookkeeping. So we say that the current day terminology of discharge and discharge system of bookkeeping is known as single entry bookkeeping. The system of single entry was later seen to be inadequate for business organization due to the urge for effective internal control. Hence, the emergency of double entry system of bookkeeping. That this system of the system of single entry was later seen to be inadequate for business organization, and that now a call for need for double entry system of bookkeeping. Then that will take us to double entry system of bookkeeping. We've been hearing of double entry system of bookkeeping. In fact, that particular one is anybody in accounting that does not know what we mean by double entry system of bookkeeping, that person is supposed to leave accounting and go to another department. Like what department? I don't know, you should know. But the
Like,
double entry
like, like,
system
like
of bookkeeping, which department? Are you
Agric,
talking somewhere?
Agric.
Okay, agric department. Okay, is it agric or history? And do we say history? Agric, is it not better? So whichever way, that one is on a lighter mood. The double entry system of bookkeeping is something we all know. So we don't supposed to waste time there, but let's see what we can do. The double entry system. Hello.
I
Hi.
Okay, fine. Thank you. I think I'm seeing myself. I don't think is this video teaching or what? Do we see ourselves?
we did not open the video, ma'am.
Okay, better. So we now say that the double entry system of bookkeeping. That is where we are. The history of double entry system dates back to the year 1494. This year is very, very important. When lecture is going on, you can be pinpointing the things that the lecturers do emphasize more on. That will help you when you're reading, because I know you have the material, or you have the course material with you, and I believe that you must have been reading that. You're not supposed to wait for the facilitator to come before you start reading. This is a matured program which you're supposed to do what is needful. I say that the history of double entry system dates back to the year 1494. Some people do mis write for us in exam. You see somebody writing 1994. Please, I said 1494. When an Italian monk called Luca Pacioli published the first printed work on algebra titled Somma di Arithmetica, Geometria, Proportioni et Proportionalita. I will repeat. Please, when you want to write something like this, these names, please try to write it correctly. Some students will write for you. They will say where you have geometria, they will tell me geometrica. If you still put geometrical, you have failed, because this is an MBA program, not undergraduate. I'll repeat the name. I say that the history of double entry system dates back to the year 1494, when an Italian monk called Luca Pacioli, the name is Luca Pacioli, published the first printed work on algebra titled Somma di Arithmetica, Geometria, Proportioni et Proportionalita. What does it mean? Everything about arithmetic, geometry, and proportions. That's the meaning. The treatise contained a section on bookkeeping under the heading The Computis et Scripturis. I'll repeat. I said that the treatise contained, I hope we know the treatise we're talking about, Somma di Arithmetica, Geometria et Proportioni et Proportionalita, that this treatise contained a section on bookkeeping under the heading De Computis et Scripturis. Luca describes three primary records that this Pacioli, or Luca, or we can still call him Luca Pacioli, that he described three primary records. The three primary records that this man describes include: one, the Memoria, which was the memorandum, or you call it West Book, in which rough notes of all transactions were made in chronological order. That is the first one. I said the Memoria, which was the memorandum or West Book, in which rough notes of all transactions were made in chronological order. Then the second one is the journal. The journal. What is this journal? A subsidiary record in which the West Book entries are reduced to their debit and credit forms. Then the third one, ledger. Ledger is the main book of accounts in which the permanent bookkeeping records are made, posted from the journals. I will repeat again. I said that Luca described three primary records. And the records this Luca describes include 1. The memorial, which was the memorandum or West Book, in which rough notes of all transactions were made in chronological order. That's the first record. Then the second one is the journal. And what is this journal? A subsidiary record in which the West Book entries are reduced to their debit and credit form. Then what of the ledger? The ledger is now the main book of accounts in which the permanent bookkeeping records are made, posted from the journal. These are the 3 primary records described by Luca. You can be asked to maybe briefly explain or illustrate, or it can be given as you should tell us the contributions of this Luca Pacioli in the history and development of accounting theory and corporate financial reporting. And I believe that if you're asked this question, that that will not be a difficult one. First of all, you must tell us that this man, who is this Luca Pacioli, that the history of double entry system dates back to the year 1494, where this man, who is an Italian monk called Luca Pacioli, published the first printed work on algebra titled, you must tell us the name of that printed work that the man did, which is Summa de Arithmetica, Geometria, Proportioni et Proportionalita. Then in brackets, you can tell us that it means everything about arithmetic, geometry, and what? Proportions. Then after that, you must also tell us the 3 primary records described by this man. You know, in accounting, when you're marking, we mark with points. So you must tell us the records, the primary records described by this man, which I've given to you. The first one, the memorial, or you call memorandum, or the West Book. And what is this West Book? It is where all the rough notes of all transactions were made in chronological order. Then what of the journal? Those rough records that you've made in that of a memorandum, then you now extract it from there. You now reduce those entries to this the journal, and where you now put them into their debit side and also credit side. Yes, from the journal now, you can now make entries from the journals to the main book of accounts, which is now the ledger, and which is the permanent book keeping records in accounting. And it is from this journal that you now made entries to the ledger. These are the 3 primary records described by Luca Pacioli. Then the Pacioli work is more used as a system of internal control than its use in evaluating business performance, because his work did not concern itself with the calculation of profits at a regular fixed period, due mainly to the surviving view of trade as consisting of separate venture with profit calculated on each venture upon its conclusion. In his work, I mean in Pacioli's work, the owner is regarded as not being different from the firm. As we all know today in that of company, that there is this concept in accounting where you now say that, which concept is that? Who can remember? That the owner is what?
Concept.
You said equity.
Entity.
Thank you. Entity concept. Yes, but in the work of Luca Pacioli, the owner is regarded as not being different from the firm, and this is one of the criticism of his work. The major criticism of his work is that owner is regarded as not being different from the firm. Pacioli is called the father of accounting, not because he was the first to invent it. He wasn't the first to invent the system of double entry, but because he was the first to document it. I will repeat this, very important, that Pacioli is called the father of accounting. Today, we do call Pacioli father of accounting. But why we are calling him the father of accounting is not because he was the first to invent it, but because he was the first to document it. His significant criticism is his inability to develop general rules and principles from the method he was illustrating. So one can ask Pacioli, or Luca Pacioli is called the father of accounting. What do you understand by the statement that Pacioli is called the father of accounting? Then you can now ask to explain, or I can give you a statement like this. Luca Pacioli is called the father of accounting because of what? You can still tell us. Then one can also, the question can come in form of this. Pacioli is called the father of accounting because of what? Or give reasons why Pacioli is called the father of accounting. When some such question is asked to you, I am not expecting you to just give me that Pacioli is called the father of accounting, not because he was the first to invent it, but because he was the first to document it. If you just give this thing, this particular statement, you have earned your mark, but not your full mark. You know, when you're asked to explain a particular statement like this particular one that is stated that Pacioli is called the father of accounting, not because he was first to invent it, but because he was first to document it. What do you understand by the statement above? I am trying to ask you to tell us what you understand by the contributions of this man called Pacioli in the development of accounting. So you tell us everything you know about this man, his contributions to the development of accounting. Now tell us that he wasn't the first to invent the system of double entry, but the first to document it. So that one is by the way. And this era that I've been describing since, we can call it the internal control system era. Go and from that place. Okay, so the second era in the development of accounting, the second era, I just say that the era that I've been describing since can be called the internal control phase era. Then the second era in the evolution of accounting and corporate financial reporting is the period of separation of ownership from management, vis-a-vis the emergence of professional accounting bodies. What I am saying in essence here is that we, for the purpose of this course, that the evolution of accounting and corporate of accounting theory and corporate financial reporting, that we can describe them, we can describe the evolution in two eras, which the first one is the internal control phase or internal control era, and now the second one, the period of separation of ownership from management, vis-a-vis the emergence of professional accounting bodies. When you're talking of that first era, that is where you now talk of the early Greek and Roman accounts, where you talk of the charge and discharge principles, which you're talking of single entry bookkeeping. Then from there, you now talk of double entry bookkeeping, where you now talk about the Pacioli and his contributions to the development of accounting. And now remember that this man called Pacioli, that the system that he described does not really separate the firm from the owner. So, and that now brings us to the second era, which is the period of separation of ownership from management, vis-a-vis the emergence of professional accounting bodies. The second era, this era emerged as a result of increasing complexity of business organization. Consequently, ownership is separated from the management. Also, in this second era, the era saw the emergence of various professional accounting bodies that were responsible for establishing acceptable standards of accounting and financial reporting today. Yes, if you go through the material given to you on this course, which I believe you have because we've uploaded the materials, if you go through the second era, then you now see that it is where we now have separation of ownership from the management, and also how the professional accounting bodies were being emerged and how they help their contribution towards establishing acceptable standard of accounting and financial reporting that we are using today. You know, previously that we've been using in Nigeria, let's bring our discussion home. Previously in Nigeria, we've been using a SAS, Statement of Accounting Standard, in Nigeria. But currently, we are no longer using SAS. Instead, we are now using what we call IFRS. We still come to that when we talk about financial statements. IFRS is what we are now using. And these standards that we are using in the preparation of our final accounts or preparation of our financial statements, they were all developed by the professional accounting bodies. And these are our IFRS that we are now using today, or today the International Accounting Standard Board has issued several standards that can enhance comparability of accounts. Yes, if you are conversant with the standards that we are using in preparation of our financial statement, you know that now that the IFRS that has been established has helped to do what? It has helped to enhance the comparability of accounts, and that is why that is the reason of you seeing that an account prepared in Nigeria, that you can compare it with the account of sister company prepared in another country. That is to say that if you have a particular company in Nigeria, the final account or financial statement, be it the financial statement of financial position or statement of profit or loss and other comprehensive income or cash flow statement or statement of changes in any form of financial statement prepared here in Nigeria, you can compare the information therein with that of the financial statement or the same type of financial statement prepared in another country of a sister company. That is what IFRS has helped us to do, what? To establish. So please, I am begging you that we are all matured students and we can read. Since you have the material, just go through the material so as to enable you to ask questions after each lecture, and also to help us to, in fact, to fast track our lectures so as to still cover all that we're supposed to cover. So the essence of this our lectures here is just to help us understand more of what we already have as the material that you have. So I think this is where we end that of today, and then we can now continue from where we stop in our next class. But that of historical development or origin or evolution of accounting theory and corporate financial reporting, we have uh, done something to it today. And in our next class, we can now start with another topic. So please, if you have question, you can ask your question. I would have loved to be seeing you, but whichever way, we will still see. I think so. Or don't you think so? Nobody is talking. Please, can you allow them to talk? You ask your question.
One time, we still see.
Yes, thank you. We still see. If not, anyhow, we have to see. Maybe one day
Exactly, my anytime,
somewhere. Or
exactly. One of these days will come and greet
hello,
you. I say one of these days will come and greet
hello,
you.
hello.
Hello, ma.
I say we'll come
Yes.
and greet you new such
Okay.
these days.
Okay, then you come and greet me. I know you have already greeted me. What I mean by you still see that there's this session that is being handled in asked to come to Soka. Then the students will also ask to come. Then we have face-to-face interaction. It seems
Okay.
as if it's twice or once before the semester ended. So probably then we'll see. If we cannot see there, we can see anytime, any hour, anywhere. This is a small world. But whichever way, that one is on a lighter mood to make the environment more conducive and still help you to think of questions to ask. Any question?
Ma, will you give us your phone number and email?
My phone number and email.
Yes, ma.
Oh, I think, don't you have them?
Ma,
Hello? Don't you have them?
oh
Somebody
really?
called me today now, meaning that you have the phone number.
Ma, people like me, I don't have
Hello?
it though.
Me too. I don't have it now. Yes,
Are you
I
sure?
don't have
Are
it.
you sure you don't have? Just check very well. Check very well and see if you have
I've
it.
been scrolling, I can't see it safe.
Okay, that one is there for another day. Buku, if there's a way they give it to you people, if it's accepted, I don't just know. Hmm?
Yes, we used to have for the other lecturers in our first semester, ma.
Hmm.
Okay.
Hmm.
So,
Yes.
are you saying that I am other lecturers? I am me. I'm not other lecturer. I am
My,
me. Don't
your
so
fellow
assume.
doctors. Your fellow doctors.
I still the same thing I said I am myself. I'm not others. So you don't
Yes,
compare me
ma.
with others.
Yes,
But
ma.
whichever way, please. I don't want to be. I don't just know. This is a matured class, and I don't just want people to be calling just for calling's sake. When you want to call, you call for something tangible. Okay. So
Yes,
my
ma'am.
number is 080 63 01 86 77. You have it,
Yes.
or you want me to be? I say zero
Yes,
eight
you can.
zero
Yes, ma.
six
Okay.
zero one eight
Yes.
six seven seven.
Seven
That's my
seven.
77.
All right.
That is my phone number, and I just needed that when you want to call, you call for something reasonable. We're no longer undergraduates. No undergraduates, they can call you anyhow and ask you, call you anytime, whether you like it or not. Please, we should behave like matured students. So if you want to call, call for something that has a
Okay,
all
ma.
right. So do we call it a day or a night? Which one do we call it?
Um, anyone
Is
is
it a day
okay,
or
ma.
what?
Night, ma.
A night. So
Yes, ma.
happy to meet you. Good night.
Yeah.
Thank
All
you,
right.
ma. Good
Thank
night.
you.
Thank you so much for the lecture, ma.
All right.
Thank you,
Thank you
man.
very
Good
much.
night.
You're welcome.
So the recording of these lectures will be made. This lecture will be made available tomorrow.
Okay, please. I didn't quite get the number correctly because of my network. Can somebody help? Okay, somebody has done that. 630. Okay. 18. Thank you, Temile.
Yeah, please, anybody who has passed question paper should help us with it, please.
Monica, please help us with that.
I will check for it.
Do
I'll
you have
check.
anybody who has question paper?
I don't have any readily available, but I'll check for it.
Oh, please,
All right,
please,
thank you,
please help us.
Monica. We are
Once you
counting
get
on
them,
you.
help us drop them on the platform, please.
I'll drop it on the WhatsApp group as soon as I get.
All right, right. We'll be expecting it. Thank you so much.
Thank you.
All right. How do we log out of this one now? Or you just
Just touch your and
No,
click on the screen, and then you'll see a button at the middle. There's the one for the middle button, like a
middle
call.
body.
Um,
yeah, well,
just click on your screen,
Okay,
and then
okay,
the call button. Yeah, you click on it.
okay, okay, okay. I've seen it.
okay,
I've seen
okay, that's it.
Have a beautiful
Ah,
evening, everyone.
you too.
it.
Technology.
All right. Good night, guys.